Today, we learn about scalping, or in other words, how to trade quickly and profitably using low time frames. Among the many video requests, I keep seeing this one pop up repeatedly. How to trade with low time frames for quick, consistent profits. Before we begin, I want to mention that this video is sufficient for learning scalping. If you don't have a strategy or approach yet, this video can serve as a great reference for your trading.
Also, I'd appreciate if you could like this video and comment below with your takeaways or any feedback that I can use to improve this channel moving forward. Without further ado, let's dive into scalping. Now, it's crucial to first understand the fundamentals of price movement before learning about scalping. If you see a candlestick chart like this, don't get overwhelmed. The key point is, if this candlestick shows completed price action, for example, here the price is 1, 2, and 3, it means during these two candles the price rose from first to third. It's that simple, but from these movements, we can deduce several things and one fundamental or root. The candlestick theory is about bull and bear candles. We can see if the price is bearish or bullish just by looking at the candles without using any indicators. Now for the bullish scenario, or when the price is rising, we only look at one thing. For example, let's mark this S. As an S candle. If the second candle breaks above the previous one, or in other words, it makes a higher high and a higher low, you'll see that this second candle's top is higher than the previous candle's top, and its bottom is also. When the price is higher than the previous low, it means the price is bullish. Conversely, when the price drops, we see a lower low. This low is lower than the previous candle, and this high is also lower than the high here. For a healthy price movement, we want to see two candles of the same type. If it's a green candle, we want to see just green candles. For a bar, we want to see a red candle followed by another red candle. This is a healthy price action, or good price action in English. However, even though good price action is positive, it doesn't mean we should trade when the price looks like this. When we open the market and see the price already in this shape, it's best not to trade and to wait instead. Most people lose money because they fear missing out. When they're at the computer or looking at the chart on their phone and see a pattern like this, they may enter a trade here if the price drops, or sell here if the price rises. But when we observe a good price action, whether bullish or bearish, it's better to avoid trading and wait. This may contradict what others teach, but you'll understand this when you start trading directly. So, the main thing to remember is that good price action means no trade or wait, while bad price action does happen. Yeah, this is bull price action, then there's a bear, it's unclear, so this is our sign. Yes, this is providing us the cue to take action. How do we act? Simply put, if you recall the earlier one, you can rewind it. When there's a bull candle like this, or an ascending candle, we expect the price to break upwards, then form a bull candle or a second green candle, so that we can conclude that the price will rise. However, as you can see here, the price still makes a higher high than the intended higher high. from the previous candle if the low is higher than the previous candle's low and the high is higher than the previous high. Logically, the price should still be bullish. However, if you see that even though it has broken above, it closes below, forming a red or down candle, this is bad price action. This is imperfect price action. When there is a pattern like this and the price breaks the low, we can expect to sell. Even if the price goes up, if the next candle is a bad price action candle that breaks above, making a higher high and higher low but closes as a down candle, we can mark the low of that candle and place a sell stop there. So when the price breaks below, we can look for selling opportunities. The point is to find anomalies in price action. When trading, don't look for perfect price action. Instead, look for imperfect price action, because that's where the opportunity lies for trading or scalping. I call this the rejection pattern. For example, if there's a green up candle, but the next candle breaks above, making a higher high and low, yet closes red, we can mark the low of the red candle and start selling when that low is broken. The question is where to place the stop loss and what the take profit target should be. There are many approaches to consider. Take a close look and carefully consider where you might enter. With a pattern like this, we can see that as we analyze the price dropping to form a candle bar, ideally, if we're looking for perfect price action, we'd expect to see another bearish candle form. However, it actually breaks out instead. The bottom's okay, but it closed as an up candle. So we can conclude that after the price breaks here, it'll go up. For take profit, you can gradually raise your stop loss. Since it's scalping, if the price keeps rising, it's good to keep moving your stop loss up for safety. As for me, I'll show you in the live trading group. I'll trade directly so you can learn. The second example is similar, just reversed. We see a green candle at the break, but it closes red. This means there's rejection. The price isn't strong enough to go up. It's simple, just basic fundamentals. This means the sellers are stronger. We mark the bottom, and as the price drops, we can start selling here. The third example is exactly the same. The price falls, isn't strong, forms a pattern like this, closes as a green candle, and the price rises. For the fourth and final example, we can also see this unique case. So if you see examples like these, you should also be prepared to see examples like this. It's a bit odd with long tails, but you must remain vigilant. We can see a red candle here. Its bottom is broken, making a lower low and a lower high. It should continue falling, but the price doesn't close as a bearish candle. Instead, it closes as a green candle, meaning we can mark the high of this green candle and start scalping buy like that. Now this pattern can be used in two situations. There are two situations, one that follows the trend, so if the trend is upward. Here we can see the pattern, then it rises. We can see the pattern here, then it rises again. Or if the price falls, we can see the pattern here. It goes down the patterns here and here. So it follows the trend. The second situation doesn't follow the trend or reverses. When the price goes up, there's a pattern here, but it drops down. That's a downward rejection, reversing against the trend. I'll show you an example now. RC, or rejection continuation, is an example of continuation, or a case that follows the trend. To use this strategy, you can employ the moving average indicator. I use a 10-period moving average to gauge the trend direction. Looking at the chart, we can see a pattern. There's a rejection pattern with a red candle followed by a downward break. However, it closes as a green candle. This suggests we can buy after the price breaks above this level. Remember, this is only valid when the price closes above the moving average. If we assume, so the key is whether it closes above or below the moving average. If following the trend, we look at the signal. If it goes up, we wait for price confirmation with a close above the moving average. If the signal drops, we look for a close below the moving average. It's that simple for trend continuation setups. The second example is a reversal pattern that doesn't follow the trend. As we see the price drop, we wait for a swing low break. Then we look for a rejection pattern. Even if it doesn't close above the moving average, we can use this to buy, but only after it breaks the swing low. If the price breaks the swing low or high like this, and we see rejection above, even if it doesn't close below the moving average, we can still sell. This reversal is only used after a swing low or high break. The video's ending, so here's the key. Only trade after market open. For Forex, wait for your market to open. Asia, London or New York. I have a YouTube video on market sessions. Secondly, set trading times. Since we're scalping, it's quick. No need to watch constantly. We usually look for trading opportunities 1 to 2 hours after market open. We trade for just an hour or up to 2 hours max. Use low time frames. I search for patterns on the 1-minute chart. All examples are from the Nasdaq index. Try it yourself if curious, and use RC criteria. Ensure clear risk-reward. Know if each trade is a continuation following the trend or a reversal. For more details, join my live trading session, 10 pips per day, where I'll use these concepts. You'll get a clearer understanding there. Learn more clearly. Now this is the last segment. I want to give you an opportunity to understand where you can take a pause. This part was cut off before. Yes, right here where there's a swing low and the price breaks at a swing low, this was cut previously. Alright, you can pause here first. Just see where the trading opportunities are, and if you've paused, I'll guide you through one by one. Previously, there was a swing low. Once it's breached, we can look for a rejection pattern that moves upward into a reversal. Over here, a rejection pattern is present, but it closes below the moving average. Even though the buy signal is below the moving average, ideally it shouldn't be considered valid. But after this, because it's a reversal, it breaks the swing low that was cut off earlier, we can enter. The reversal doesn't have to close above or below the moving average, it's not an issue. So we can enter here. Scalping. Adjust the stop loss repeatedly, maybe until you get stopped out. That's our first setup. Then we wait again for another setup. Here it breaks the swing high again. Here's another rejection pattern. We can do some small scalping. Drop the stop loss further, it doesn't matter. Okay, this isn't valid. He breaks the high. And here again, we could observe the break of the swing low. Then it makes a lower low and lower high, but closes as a green candle. So we can buy here, we can scalp upwards. What else? Let's find out again. He has swing low. We can observe a pattern here. We can sculpt after he breaks the swing high. Just a small one, so use this pattern wisely.